Hello and welcome back to a chilly London. There were no surprises from the ECB or the Bank of England, but there was still plenty to talk about, and I've been speaking with Ishaq Siddiqi from ETX Capital. So what did you make of Mario Draghi's comments? He seemed cautiously optimistic.
Yeah, I think the markets like it. At this moment right now, we're still trying to digest it. As you said, cautiously optimistic would be a good way of putting it. They kept rates on hold, said it was unanimous. The euro liked that. That's greater visibility for the euro in that case. Markets are currently on the up on the back of that. I think more so on the decision, it was mainly the fact that Draghi believes that the environment now is a lot more comfortable in Europe, and he said financial market conditions are improving. He thinks confidence indicators are improving, which is true to a certain degree. We are in a much more favourable environment than we were this time last year. Greece has an exit to the Eurozone. We haven't seen a bust up of the euro. The euro is actually at a pretty good level right now. It's near that 132 today. So what we think of it right now, I think it's positive. He does see a pickup towards the end of the year in 2013. He reckons that Europe will struggle for the next 6 months, which, judging by indicators, it seems likely that Europe is going to be struggling for the next 6 months.
But obviously sentiment's very buoyant at the moment, and Draghi in a way continued that, but this all comes at the same week as the Eurozone unemployment hit another all-time high. There's still huge challenges ahead. Nothing's really solved as fundamentally, is it?
No, absolutely. I think, the essential message that we're reading, or at least the way the city is seeing it in London, is the best way we can put it is that Draghi said that the worst is over for now. That doesn't mean that tensions aren't going to flare up later on. He did mention that risks on the downside. He also reckons that the lending and credit markets are still suffering at the moment, which basically means that banks need to do a lot more to start lending. They're not passing off those rates to their end users. There's definitely a big uncertainty in Europe right now when it comes to the situation in the Eurozone and the periphery. I think going forward in 2013, that divide between core nations and periphery nations is going to continue to grow, and that harsh austerity measures that have been placed all around the region are going to really bite, and the next 6 months are going to be very crucial for Europe. If we see further slippage, fiscal slippages for countries, and we see further deterioration in the Eurozone economy, we are going to see the ECB cut rates.
And a quick last line on the Bank of England. It seems there's not a lot else Mervyn King can do.
Yeah, no, it does, and I think, interestingly, as long as the UK economy stagnates, which it looks like it's going to do for the next 6 months, the BA is going to be in a constant wait-and-see mode until the new governor comes in, Mark Carney, towards the end of the year. Now, this time round, they stayed on hold with rates and QE pretty much in line with expectations, a very muted response in markets. What's going to be interesting to see now is the minutes for this meeting that we've just had. It's going to come out towards the end of the month. The Fed recently, their latest minutes suggested that there's a bigger divide on the FOMC. Will we see that with the MPC this time around? Will we see more MPC members perhaps hinting at QE being boosted as quick as possible? Or, I mean, it's unlikely that they want to see an end to QE right now. The situation in the UK is very uncertain. We're going to need to see, PMI services that came out a few days ago were very grim and suggested that the UK could be in for a triple dip recession. At this moment right now, I don't think anybody has a good idea what's going to happen with the UK economy, and the BOE is going to be under increased scrutiny in the coming months to start acting a lot more aggressively than they have been.
Well, we're not quite finished there. As always, when we visit ETX Capital, we like to bring you a double whammy of interviews, and coming up is some quality FX analysis. I'm wondering what factors are driving the euro dollar at the moment, because after Christmas after the New Year's even, we saw the dollar tick up after the fiscal cliff solution. Now it seems to be going the opposite way again, with the euro driving that particular pair. So what's driving the euro dollar at the moment?
All right, what's driving euro dollar is obviously two factors. On the euro side, Europe seems to stabilize. They don't see a strong recovery, however they see kind of stabilization. Some numbers are good, like industrial production seems to pick up a bit again. even if the unemployment has been all-time high, 11.8%, which is 26 million people. So on Europe seems to stabilize. We have Italy and Spain doing some action on the auction for the bonds. It seems to work. So they seem to kind of recover in Europe and stabilize. That push up the euro. That wouldn't push up that much if we had no bad news on the US dollar side. And what happened today is actually the change in the jobless claims, which was worse than expected. And suddenly you could see euro weighting much more against the dollar, and that pushed up the euro dollar really strong.
So what levels are you looking at for the euro dollar at the moment? It's got a bump after the ECB meeting.
Absolutely. So we were, just before the meeting, we were 121 to 123. 129 was the bottom, 133 was the top. Now we do reconsider, obviously, with everything. We're now close to the 32, when 131 was the area we were for a week or so. 132 is the new level we're around. So really we could go as high at 134.80. That would be the top price we could reach on knowing all the information we have in hand at the moment. That would be the top one.
Okay, let's focus on the sterling before we look at some levels. What's your feeling with the sterling? Because again, it hasn't been performing particularly spectacularly since the new year.
No, first it hasn't performed particularly well, and also we are a bit confused. We don't know where to stand really. We have some pretty bad numbers. They want to get out of Eurozone, of Europe maybe. So it's a lot of unclarity, we're in a bit of the fog, if I can say. So the pound is compared to the other currencies. So we saw a few months ago, the whole world was driven by what happens in the US. At the moment what happens is the pound is more driven by whatever happens on the other currencies that's going to weigh against them. So I would say I would be more bearish than bullish on the pound.
So what about levels again, if we start with the cable?
Yeah, so cable, we initially wanted a resistance, obviously because of this change in jobless claims this afternoon. Pound gets slightly stronger against the dollar. So originally we had a resistance 61.10, which is the level we are at the moment. So this has been breached. So now we can expect maybe at maximum a 63.50, which is 2012 years high actually. On the way down, which is more interesting for us, we have a few levels. We have 59.90, which is the next kind of stop loss level. Okay, among these 59.90 we got a few stop loss. If they get triggered, then we can open up a new 59 figure, okay, which would be a kind of key reversal area. When it touched 59 a few times over the last weeks and months, every time it touched, it rebounded. So it seems to be a reversal. If we were to touch and break this 59, then we go 58. That's all we can say so far. On the way up, as we say, yeah, 60, 63.80, 63.50 seems to be reasonable on the way up.
Okay, and just the final pair, which we'll talk about, the euro pound.
Yeah, so euro pound, this is tricky because obviously slightly better news in Europe, slightly worse news in pound, but kind of both equilibrate each other. On this one, we're on a ratio of 81.65, okay? So that's where we are at the moment. We're about 82, I think, at the moment. We're looking at 82.20, which was again a year's high. Is 82.20, maybe 84.85. I mean, 0.85 is actually a 2012 high, so last year high, which is a good level. So we would be again bullish because euro against the pound. On the way down, 80.90 seems to be kind of a key support. Okay, and then 79.70 would be basically November low. So we would rather be bearish on this one. So we would plan on between 79.70 and 80 basically.
Okay, that's all for the moment, but on Monday we'll be bringing you some brand new guests on London Direct. But for now, goodbye.